Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And given the market volatility, we assume there are a lot of queries that you want to ask from our experts. But before that, let's quickly take you through what the market action is. And Cheryl, it's so good to see the cheer back on the markets. The financials are leading the way and so is the Adani group of counters.
Very good morning to you, Shrishti. I don't know if I would want to use the word cheer with so much cheer that you have. Or maybe the cheer is because we are back together on the show after a gap. Yes, I would like to kind of term that happiness to that. But yes, I'm just hoping this sort of a bounce is actually sustainable for the market, given the fact that we've seen sharp downticks from 52-week high levels for the market. So yes, hopefully this cheer is we're able to build on to it and sustain this momentum going ahead. So 0.5% uptick coming in for the benchmark indices at the day's highest point. That's your Nifty and the Sensex and the broader markets as well, which are participating on the upside this time around, outperforming the benchmark indices. 2% uptick coming in for the mid-cap index as we speak. If you look at Nifty Bank, healthy outperformance from that one as well. 1.5% uptick coming in for Nifty Bank as we speak. And the advanced decline ratio is looking extremely healthy. And we've actually held on to that momentum when you talk about the advanced decline ratio since the word go. So far, it looks like we will be able to maintain that particular stance. Talking about the losers first time right now, given the fact that we have HCL Tech, that is the top loser on the Nifty, 8.5% downtick coming for HCL Tech, followed by HUL, and after HUL you have all of them who are losing with sub 1% cut. So you have Nestle, Apollo Hospitals, Tech Mahindra seeing mild bit of losses in a trade today, while on the flip side you have very healthy set of gainers, and they have to be from the Adani camp. So you have Adani Enterprises, top gainer on the Nifty, up about 8.3%. I stand corrected. You have Adani Post, they're seeing gains of about 5%. NTPC, Hindalco, IndusInd Bank, all of them actually logging in very healthy and strong gains in today's trading session. If you look at the sectoral print, then you have the IT and the FMCG sector that are taking it easy in trade today, while all the other sectors are actually gaining, with the metal index being among the top gainers, 3.6% uptick coming in for the metal index. PSU Bank Index also seeing good gains, about 3.5% or so. But yes, talking about tech sector, that one is under pressure in trade today, and all thanks to HCL Tech, isn't it, Shrishti?
Well, certainly, Cheryl, what a fall in HCL Tech is what we are witnessing, though the numbers were actually in line. But yes, definitely there were some concerns that these brokerages have highlighted. Even apart from that, some of these brokerages have even gone ahead and downgraded the counter, even after almost inline set of numbers coming in. But what were the pain points and why did brokerages change their stance on HCL Tech? Let's get in more details on this one. And Ansh is joining us with all those details. Ansh.
Well, the numbers were in line with the expectation. If we compare with the previous quarter, then revenue was up, EBITDA had improved, even profit had jumped. So what's the reason? Now, one of the reason is the management commentary. Management has said that the small deals are converting quicker, but large deals are taking time. So this is one of the reasons why market is not liking the stock currently. Also, the management has said that the software performance has improved, has gone up, but it was below the expectations. Also, they have said that the LTM attrition is at 13.2% as compared to 12.8%, and it is expected to end at the same level for FY25 as well. Apart from this, we are seeing that there's a brokerage note also from Nuvama, and they have downgraded the stock to hold, and they have said that there was a decent growth driven by retail and telecom vertical, but the valuation of FY26 is at 28.5%, which appears very full, is one of the reasons why they find the stock weak.
We delivered a very good quarter. Our Q3 was strong. Of course, the software business has a seasonality which delivered almost 18% sequential growth. And services business also delivered a strong growth of 2.2%. And we expect the momentum to continue in Q4, but there would be some moderation in some of the large projects coming to an end and anniversary impact of some of the large deals. Factoring all that, overall full year guidance, we provided 4.5 to 5%, a 1% increase in the lower end of our guidance. Our pipeline is quite strong. It's almost near all-time high, and it is well diversified pipeline across verticals and geographies and service line.
All right, so that's the management of HCL Tech. Definitely the street is not too happy with the way the numbers or the guidance actually panned out for the company. 8.5% downtick coming in for that tech major, and that's actually dragging the entire IT pack also lower in trade today. But remember that you had Nifty that actually broke below those key levels. Now the main question or the most pertinent question arises is that where will the index go ahead and take support? Is there more pain in store? Earlier in the day, you had Kunal as well as Nikunj dissect that for us on the charts. Let's take a look.
10% correction has kicked in, but I just want to politely remind our viewers that it's not for the first time we've seen a 10% correction. 10% correction in any bull market, when you look back and analyze the reason of that correction, it will be like a passing phase. But data is data. They say that you look at data to understand future. Well, that's what we all do, and that's what Kunal does, which is what, so we'll use his expertise to understand that when we've seen a 10% plus correction, what have been the extremities of those corrections, which is that how much more can it go? And if it goes, and if this correction has to test its previous extremes, how deep the correction could be. So Kunal, we are at a 10% correction on the Nifty. You know, a year from now, it will be passé. Nobody will talk about it. But today, everybody is talking about it. So for those who are focusing on today, they want to understand that how much more can the Nifty go if the previous patterns are at play.
Fantastic, Nikunj. So, yes, as you rightly said, that we've seen through a phase where markets have corrected more than 10%. In fact, just in 2022. So, I've flagged off all the zones where the index have gone through a correction of more than 10% or where the major corrections have ended. So, this chart which you can see for the index is the chart where major corrections, whether it's in 2022, 23, prior to the COVID correction, all of those points, the corrections have halted at this major moving average. This level right now projected to be at 21,400, 500 zone for the index, which means assumingly, say over the next 1 week, 1 month, if the pace of fall for the index drops down, then we may probably make a higher low, maybe around the 21,600 or 700 mark. So I'm keeping a ballpark number over here of 21,500, which could be a worst phase of the correction, something very similar what we've seen in 2022, 23. So that becomes a one major support for the index. Then we look at the minor trendline supports, like for short-term traders, someone is looking out for an immediate support point. Now, this trendline support, which you can see from 2023, this has played out fantastically well over the last 3 major phases when the markets have corrected 10%, as well as those points when even the phase of elections, where the index fell by 20% on intraday basis. All major corrections have been absorbed at this trendline support. That's around 22,800 mark. So that we earmark as a very short-term support for the Nifty. The third chart is the most interesting one, Nikunj, because this tells you that the behavior of this correction will now start to change. Now, this is the RSI for the Bank Nifty. The lower chart is where you can see the Bank Nifty charts. Now, whenever the Bank Nifty hits a oversold territory, the pace of correction halts. It's not that the trajectory will drop down, but the intensity with which the markets go into a correction, when it touches the oversold territory, it then goes into a process of a bounce, then a correction.
So we are in that climax now.
Yes.
It's like the last, like they would say that the last bomb has exploded.
Yes, the last juice is about to, get secreted from the markets. And that, I believe, the max could probably happen when we correct by maybe another 1,500 points on the index. That's 21,500 mark as per the projections on the long-term average.
Okay, so 1,500 points is the maximum downside which Kunal feels you could get in this correction. I'm talking Nifty here. I mean, 1,500 points is 5 to 7% more. That may automatically multiply to 5 to 10% for mid-cap stocks. But that's the time when if you correct 5% plus, I mean, that's the time you should really start shopping rather than running from the fall. That is what the technical indicators are indicating.
That's what the technical indicators are indicating when you talk about the Nifty. Where will it take support going ahead today as of now? If you look at the intraday movement of the markets, definitely a healthy one. We are building on to gains, and as we speak, we are just tick by tick movement. If you see on the charts, now we are at the day's highest 0.7% uptick coming in for a Nifty. We have Mr. Chokkalingam who's joining us on the show. Very good morning to you, Mr. Chokkalingam, and I'm sure we have a lot of investors who are waiting to hear from you, to get your comments on what should they do in this market. Because yes, if you see in the last 4 years, no doubt there have been bouts of corrections that have actually crept in this bull market, but no one is always prepared to actually counter these downticks in the markets, right? Now, how should one brace themselves, realign their portfolio for a brand new 2025?
Very interesting question. If I am permitted, I will take 2-3 minutes only. The market has seen last 30 years or 40 years this kind of ups and downs. But ultimately, the market never failed to create wealth. So point two, the volatility in small cap is much more severe than the large caps. However, wealth creation opportunity is phenomenal in small cap. Point three, but one has to reduce the risk by playing between equity asset class and fixed income. I always say that minimum 30% of your financial wealth you always keep in fixed income securities like a bank deposits. The remaining 70% you can allocate to equities if you are very high risk taking. Out of that equity allocation also, minimum 30% you keep it for Sensex and Nifty stock. The balance you invest in quality small and mid cap. But the last point, even what happened yesterday, we were very painful, no doubt, but we have not given up our hope in Indian market or wealth creation opportunity, because as long as you buy quality small and mid cap stocks, you can ride through this kind of setback and pain, you will become a winner. So what are the 3 key points to be very brief? One, never compromise on the valuation comfort zone. Ensure that if PE is 50, profit grows at least by 25%. Never compromise on the management quality, never compromise on the balance sheet quality, which means don't go for highly over leverage or the companies which have a very high receivable and inventory and working capital is in stress. Lastly, huge wealth destruction has happened in the last 2-3 months, particularly in the stock where there is no valuation comfort, where the shareholdings are 99% and floating stock is just 1-2%, and there is no relationship between the fundamentals and the valuation at all. That is where people lose 70-90%, and problem is you never get back opportunity to recover your capital. So always invest in small and mid cap in such a way that you aim for at least return of your capital if money is not made, but never lose your capital. So first, the most important thing is return of your capital should be safe. So therefore you follow those 3 parameters, and definitely if you minimize the risk, the return will be phenomenal in the Indian market. Let me tell you, most probably by end of this year, calendar year, once again, quality small and mid cap stocks will create a phenomenal wealth. That is where you have a lot of unique stories in terms of growth, holding investments, deep values, land bank. Let me tell you confidently, these kind of opportunities are not there in 30 Sensex stocks or 15 Nifty stocks. It is there in 4,000 small cap stocks. But it comes with risk, and that risk is manageable if you follow what I have suggested on the quality of the stock.
Quality is what one should look at when you look at investing in the market, be it the mid cap, small cap, even for the matter of fact in large cap. But yes, quality is what you should look at, especially when you look at the quality of the balance sheet, quality of the management as well. Thank you, Mr. Chokkalingam, for actually sharing that insight with our viewers. But on that note, we slip into a break, and when we come back from the break, we'll start addressing all of your queries. So don't go anywhere, viewers. Welcome back. You're watching Buy Now, Sell Now on ET Now show, where I get your answers for all of your stock-related queries. If you look at the rupee, once again hitting a fresh record low against the dollar, 86.56 or 58 on an intraday basis. That's the level that the rupee has actually hit as of now. Markets, if you talk about a tad bit off the day's highest point. But let's introduce our guest for today. We've already spoken to Mr. Chokkalingam a short while ago to get his take on the markets. We also have Kunal Bothra, who's joining us on the show to take all of your technical queries. And thank you, gentlemen, once again for joining us on the show. And a very good morning to both of you. Kunal, let me start with you, or rather, let me start with you, Mr. Chokkalingam, for a change. This one is coming from Satya, and he has a query for you. Particularly, he wanted to know about Cyient. Does it make sense to go ahead and buy Cyient? He says that he believes that once upon a time it was your strong bet.
I mean, once upon a time we had initiated in three digits, low end of 3 digits. Even now we have a buy recommendation on Cyient. I firmly believe that it is one of the beautiful stocks in terms of the valuation, and I also do believe that there will be further move towards consolidation in the IT industry because a large players are growing anywhere 2 to 4% in dollar term. So we saw a lot of consolidation deals in the last 10 years, but last 2 years there is lullness. I believe that would be activated, but I am not forecasting that the Cyient would be taken over. I am only saying that such a possible consolidation in the industry would re-rate a stock like Cyient, which has got a very low promoter stake. Third, the most important trigger for Cyient is starting a subsidiary for the semiconductor business. So some of the developments we have been studying, and that gives a lot of confidence. It gives confidence for one more reason that they developed the electronics business under Cyient DLM, and they unlocked a lot of significant cash for the parent company Cyient. So considering these factors, I believe Cyient is one of the most attractive stocks.
That's the take coming in on Cyient. But Kunal, very good morning to you. The first query that I have for you is coming in from Jay Krishnan from Kerala, and he wants advice on Coforge. His buy price is 9,678 rupees. What's the medium-term outlook on this one? Would you suggest to average at this particular level, or any other level that you would like to highlight?
Well, it seems you bought at the almost at the peak of the price trend for Coforge, and that generally may not turn out to be a very good buy price for the stock. Now, what the stock is showing in the last 2-3 days or in the last 1 week is a phase of mean reversion, and that generally happens in the leg of the market trend where the strongest stock, which has been very sturdy or resilient for the entire market correction, that goes into a mean reversion phase. Now, that generally is a process of 2-3 weeks where these stocks they underperform, they come back into a mean reversion phase. There is some traces of high volume selling into these stocks. But I believe that buying the stock or averaging out at current levels may not be a good strategy. Yes, it's been one of the strongest stock from the mid-cap IT space, but then I would believe that just wait out for another couple of weeks. Once the stock settles back into a trading range, that could probably happen maybe around the 8,000, 8,500 mark for Coforge. That could be a better opportunity where you can look to buy. So wait out for a couple of weeks and then see once the stock holds on to a strong support zone for Coforge.
Alright, so that's about Coforge. Kunal, let me come back to you once again because the next query that I have is coming in from OSN Reddy. He's writing to us from Hyderabad and he wants to know about Nestle. He has 33 shares of Nestle at a price of 2,448 rupees per share. He wants to know whether he should hold or average this out or exit in order to buy ITC.
No, I think you should hold on to the stock. Again, the comparison, the second part of the question is also very, very interesting where do you want to shift the money back towards ITC? ITC has also been a stock which we've been recommending. So yes, ITC is something which you can buy, but not at the cost of Nestle. And especially at a time when Nestle has gone through a sharp correction from 2750 thereabouts towards 2200 mark, 2150, where the recent correction has happened. My belief also is that the stock can further come down into a further corrective mode. But the fact is that your buy price is not at an extremely steep level. Since you bought at 2,400 levels thereabouts, I believe that maybe closer to 2100, 2150 range is where you can look to average further for Nestle. That's where I would believe that the risk would start to look very attractive for the stock. So wait out for another couple of months and hopefully in the range of 2100 to 2150 is where you should look to average.
That's the take coming in on Nestle. We're moving on, and Mr. Chokkalingam, this next query that I have is coming in from Sali Devi from Kerala, and she wants an advice on Indigo as well as Adani Ports. Any of the stocks that you like for a fresh buy at these levels?
Oh, yeah, certainly. We have a coverage on Interglobe Aviation also. Unfortunately, it has corrected because oil price from the bottom has gone up by 17%. Which used to be down 20% from the peak, suddenly reversed, which is a little negative, but definitely short term there is some concern, but I believe it is one of the best large cap stocks for medium to long term. There is no doubt about it. And second stock is
Aviation, and the other one was Adani Ports.
Yeah, definitely for long term, one can consider Adani Port as well. Because even though the exports are not growing, perennially India's goods imports are growing in strong double digit, and that is positive for port business across the country. So therefore, Adani Port will be a beneficiary in the long term. So for long term investors, I suggest Adani Ports.
Kunal, coming to you, the next query is coming from Sri. He's writing to us from Bangalore. He has some stocks that he wants to look to buy. That's Keynes Technology and Amber Enterprises. Is it a good time to buy both of these counters? Any short-term targets that you can give for now?
Yeah, good stocks to buy, but I'm not sure whether it's the perfect timing where you can look to buy the entire quantity at current levels. These stocks have just completed the first phase of a mean retracement. Like what I give an example for Coforge, which was one of the strongest stock from the pack. Same was the case with the likes of Keynes as well as Amber. From the entire space, these were the stocks which were consistently making new highs, and this is the first round of correction for these stocks. Maybe there could be another leg of correction which could trickle back into the next 1 to 2 weeks for these names. So you can start buying maybe 50% of your expected quantity at current levels, and then just wait out for another couple of weeks in case if there is any further drift of say a 5% to 7% further from the recent lows. That I think could be a much more better opportunity where you should look to average further.
All right, that's the take coming in on both of these names. But with this fears, it's time to slip into a very short break. Don't go anywhere. As we come right back, we will take more of your stock-related queries. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock-related queries. Then we do have Mr. Chokkalingam as well as Kunal with us. And Kunal, I'm coming to you for the next query, and this one is coming in on BHCL, when Manoj from Mumbai has bought almost 500 shares, but his buy price is 250 rupees. How do you see the stock moving ahead?
So a stock which has fallen very sharply, from I think 270 levels thereabout, where the stock managed to break its long-term averages. It's fallen down to almost 195, 197 levels for BHCL. But I think at current levels, it looks like the stock has come back into a oversold territory. Now that could mean that price-wise, the stock may start to look very attractive. The risk reward could be attractive. But if you have a time frame of say 6 months, 1 year plus, then I think at current levels of 195 thereabouts, BHCL could be a stock where you can look to average, bring your cost price down towards say closer to 220, 215 thereabouts. And then potentially over the next 6 months or so, once the stock recovers from these major divergent levels, that's where I think you could probably get a much more better exit for BHCL.
All right. Coming to you, Mr. Chokkalingam, this one is coming from Vinita from Mumbai. She has 50 shares of Trent that she's purchased at a price of around 7,000 rupees per share for the longer term. She wants to know whether it makes sense to add some more at the current market price in a portfolio.
He is a tactical investor looking for short-term benefit one can, but otherwise I do not find valuation comfort in Trent. Instead of Trent, one can consider stock like ITC in the large cap space.
All right, instead of Trent, one can look at ITC, and that's the advice coming in on this counter. But moving on to the next query then, and this query is coming in on Zomato, and Kunal, Vivek specifically wants your advice on this one. Can he go ahead and buy at current market price and hold it for the next 1 year?
Yeah, so I think buy at current levels. My sense, I think earlier was that close to 225, 235 range could be a very good range where Zomato could come back into a mean reversion. That could complete a mean reversion of almost 25%, 30% from its recent highs of 300 plus levels, and that could also mean that the stock would complete a mean reversion closer to its 200 moving average. Both of these levels have happened for Zomato, and I think that's why I would believe that at current levels it could be a good risk reward for you to start buying into the stock. Have a time frame of more than 1 year, because I believe that potentially these stocks, when they come back into a mean reversion phase, these stocks may remain into a sideways range for 2-3 months initially, but then once the trend resumes for these stocks on the upside, these stocks, they hold potential for breaking past even above their previous lifetime high levels over the span of the next 12 to 18 months. So that's my suggestion for Zomato.
So that's the take coming in on Zomato. Kunal, coming back to you, what's your take coming in on Mahindra & Mahindra? Vidya from Singapore wants to know whether she can buy a fresh at current market price.
See, it's one of the most fantastic charts from the large cap name as well as from the auto pack. We've been seeing that the stock has been extremely resilient, and you would want to have stocks which are very resilient, very strong, have that leadership quality in terms of price performance, and they can add sturdiness to your portfolio. So I think M&M is a classic fit into that category, and of course one of the top performers from the auto pack over the last 3 to 4 years. So I would suggest that M&M should be a part of your long-term portfolio, but I think there would probably come a time, say over the next 1 month, 3 months, that many of these other auto stocks, Bajaj Auto, Tata Motors, etc., they would also start to look very lucrative in terms of risk reward. So you'll have to balance it out in terms of adding sturdiness to your portfolio, being more consistent, as well as buying stocks, say potentially over the next 1 to 3 months, where you can stand a much more better chance of getting potential higher returns.
Right. The next query that I have is coming in from Bala from Coimbatore, and he's wishing our team a happy Pongal. So, Mr. Bala, wish you the same and happy Sankranti to all of our viewers as well. But Mr. Chokkalingam, his query is coming in on two of the banking majors. One of them is Canara Bank and the other one is Federal Bank. His query is this the right time to enter any of these stocks with a 2-year investment horizon?
Canara Bank, yes, it is really one of the most attractive PSU banks. It also has triggers in terms of possible listing of 2 of its subsidiaries engaged in insurance and AMC. Valuation wise, also after the correction, it is attractive. Second, in Federal Bank, I would suggest Bank of Maharashtra. The Bank of Maharashtra has posted the lowest net NPA, and business numbers have come in for Q3, amazing. The credit growth is the best among the industry so far, which announced credit growth for Q3. And growth, quality of asset, extraordinarily superior for Bank of Maharashtra. The stock also fallen a lot. So therefore, I would suggest Bank of Maharashtra instead of Federal Bank.
All right, so that's the take coming in on those counters then. This next query that I have is coming in from Lakshmi from Bangalore, and she has 30 shares of Varun Beverages at a price of 595 rupees per share. Kunal, can she add some more right now or should she wait?
So I think it's a good price where you can look to start buying. The stock has fallen back quite sharply from 650 levels to 570 thereabouts, and it looks like that the stock has been consolidating for the last 1 to 2 years. The lower end of the price trend is closer to 550, 540 for Varun Beverages. Now the interesting bit is that the stock is forming a bullish hammer formation today, which means that 550, 570 could actually be a very good range where you can look to start nibbling into the stock.
All right, that's the take coming in on Varun Beverages. But Mr. Chokkalingam, the next query is coming in from Geeta, writing to us from Dubai. Wants your view on IDFC First Bank because she's been holding 15,000 stocks, which she purchased a few years ago, and now the cost price is at 51 rupees. That's a buy price actually. What's your take on this one, Mr. Chokkalingam? Good to hold on, or maybe look out for some other bets? Her view is for a long term.
Maybe 5-10% tactical upside is possible in IDFC First Bank. But if somebody is interested in long-term wealth creation from a banking stock, I would stick to bank like Bank of Maharashtra. That is far superior because Bank of Maharashtra also has a large equity base, but then growth in business asset quality is far superior. And with IDFC Bank with such a huge base, I believe, my personal view is that it has to make a substantial growth, which I find difficult. So therefore, I prefer Bank of Maharashtra to IDFC Bank for long-term investors.
All right, let's move on with the next query then. This one is coming from Shashi Gaura, who's writing to us from Bangalore. Wants to know about Amar Raja, 80 shares at a price of 1,487. Kunal, what's your take?
Well, I think it's an interesting chart. The stock, which did exceptionally well in mid part of 2024. I remember, I think there was a point where the stock on a quarterly basis had moved from 800 to 1600 or 1700 thereabouts. Now, in the last 3 months, of course, the stock has fallen very sharply, 3 quarters rather, but it's still trading much above its key support levels. So I would believe that if you purchase at higher levels, it's a good price where you can look to start averaging out for the stock, especially if you're a long-term investor.
All right, that's the take coming in on Amara Raja batteries and mobility. And the next query that I have is coming in on Axis Bank. And Mr. Chokkalingam, this query is from Jaydev Appa, holding 200 shares at a price of 1,150 rupees. He's betting for the next 3 years on this one. But how do you see the stock moving and what should he do?
3 years it will pull back, but going is tough for generally in the banking industry. Because the credit growth has slowed down from 16% to even around 12% now. So in the short to medium term, it may not outperform Nifty, but definitely in 2-3 years, it's a hold. It can create a decent return.
Right, so that's the take coming in when you talk about Axis Bank then. This next one is coming from Shivakumar, writing to us from Chennai, has about NTPC 50 shares at a price of 380 rupees per share. Kunal, is it good to average at around the levels of around 310?
Yeah, it's a good price where you can look to average stocks like NTPC. My sense is that many of these PSU stocks have gone through more of an exaggerated correction over the last 3 months, 4 months or so. NTPC also is one of the stocks falls in the similar category. From 448 to almost 300 or sub 300 mark, the correction has been quite steep and almost like a 40% correction, which generally provides a very strong opportunity for long-term investors. So I would suggest a buy.
All right, that's a buy coming in on NTPC. But the next query, Mr. Chokkalingam, is coming in on Sun Pharma. Ajit Kumar Panda from Andhra Pradesh has these stocks from a price of 944 rupees. Can you advise him for the long term, maybe for the next 2 to 3 years? How do you see this stock moving? Because it's almost been a doubler for him. And he also wants to know that if you are so bullish on this stock, would you advise to go ahead and buy even more at current levels?
It is a hold. It's a most defensive stock, particularly when the rupee is depreciating, which is positive for large entire pharma space. But the stock has already ran up. I don't think the kind of wealth it created in the last 2 years it can repeat it. So if it's a defense, for a defensive conservative investors, it's a hold. For investors who can take a little bit of risk, I think Indoco remedy can create wealth.
This next one is coming from Sitaram Ganesh, who's writing to us from Chennai. He is a huge follower of you, Kunal, with your unbiased analytical skills, is what he's written to us. He wants to know whether he can consider buying REC and Dabur right now.
Thank you so much for that. So I think both
You can smile also a bit, Kunal.
Yeah, I did. While you were mentioning, I did.
Okay.
So I think REC, of course, I strongly believe that REC and PFC, they are fantastic buys at current levels. And especially at the point where these stocks have corrected more than 20% in the recent past. And we've seen these stocks being absolute compounders over the last many years. So I strongly believe that these are very good territories for all investors who've been having time frame of 3 years, 5 years or more. I think they could look to start accumulating stocks like REC as well as PFC. Dabur, on the other hand, I just mentioned for Nestle that it's better that you start buying into a staggered approach for stocks like Dabur, because what happens is generally when there is a phase of a 20%, 30% correction for a sector, the sector goes into a double test of a previous support. So my sense is that over the next 1 to 3 months, there is a very high probability that many of these FMCG stocks can get into a second leg of correction. So buying this into a staggered approach could be a better strategy for the FMCG majors, including Dabur.
Take on some of these FMCG majors, but with this viewers, it's once again time to slip into a very short break. Don't go anywhere, we'll be right back.
Welcome back. You're watching bnsn on ET Now. Let's continue taking all of your stock related queries. Firstly, let's take a look at where the markets are at this point in time, because we are a tad bit off the day's highest point when you talk about the benchmark indices. Let's take a look at what Nifty Bank is doing and where that one is headed at this point in time. Yes, there you go. Nifty Bank as well is off the day's highest point right now, Shrishti.
Well, certainly, Cheryl, and that's what we were talking actually about, whether or not markets will be able to sustain those levels or not. But yes, for now, some moderation coming in from those high levels. Kunal, any take on this one, the kind of moderation that we are seeing on the markets, or was it warranted, or you were also expecting the same?
Yeah, I was expecting the same for the index on intraday basis, especially the last half an hour or so, because there's bound to be a point where the index would probably come back into a more of a sanity kind of levels, because over the last 5-7 days we've gone through a very sharp correction. This bounce back is bound to be meeting with a lot of risk aversion, a lot of mark to market feelings in terms of portfolio. So I think in that sense there's bound to be a point where the excesses even on intraday basis could be shed.
That's the quick check on the markets then. But with this, let's get back to all your stock related queries. Then we are just in the last leg of the show. And the next query that I have is coming in from Venkat Jala. And Mr. Chokkalingam, if you can advise Venkat on some of these pharma majors. He's holding 500 shares of Glenmark Pharma. Buy price is 450 rupees. Is it wise to sell those shares and rather buy 250 shares of Natco Pharma or maybe Elkim for a long term?
Glenmark is better than other two pharma. If he is holding on to pharma, at least till March mid, one can continue to hold because I see a little more stress for the markets because of the rupee weakness and oil price rise. And therefore, pharma space could be most defensive purely in the short term.
The view coming in on some of these pharma majors, but the next query that I have, Kunal, is coming in on NBCC, wherein Suresh Nair from Bangalore is having 28% of loss on his purchase on NBCC. Should he go ahead and exit this stock, hold, or maybe average? And what are the hopes on recovery of this stock?
No, I think you should hold on to the stock now. 28% higher, which means you've bought somewhere closer to 110 odd mark for NBCC. Now, the highs for the stock was around 140 and currently it's at almost 80, 82 levels, which means that the stock has gone through almost like a 40-45% correction. Now, there could be a chance that maybe there could be another 10% of a residual correction, which could be at play for NBCC. But that's the level where I would suggest that you should look to even average for the stock. So, I would suggest the hold if possible, and assuming if the stock corrects towards 70 odd mark, 70, 72 thereabouts, very good level where you should look to average.
That's the take coming in on NBCC. But the next query, Mr. Chokkalingam, is coming in on JSW Energy, wherein Snigdha from Delhi has bought 400 shares of this stock. Buy price is 603 rupees. And she also has IndusInd Bank from a price of close to 1500 rupees. But there the quantity is just 10 shares. But what's your view on this one, Mr. Chokkalingam? Good to hold on maybe for the next 1 year?
Forced to steep correction, one can hold IndusInd Bank. It's a quality bank, but going through a little bit of stress in the short term. So short term, one may not get a return, but fundamentally in terms of valuation, IndusInd Bank is quite attractive hold for medium to long term. JSW Energy is a great management, great business, and very aggressive expansion. But if I look at the valuation of the power capacity they acquired or the holding, even at this price, I am not comfortable. But since the stock has corrected a lot, I would give a hold on JSW with another 5 to 10% upside.
That's the take coming in on IndusInd as well as JSW Energy. But with this, viewers, we are completely timed out in this edition of Buy Now Sell Now. Mr. Chokkalingam as well as Kunal, thank you so much for taking the time out and helping all our viewers resolve their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for tuning in. We'll see you same time tomorrow, and we'll try to address as many queries as possible. But for now, thank you so much for tuning in.